All right. It is 8 o'clock Sunday, November 3rd, and I am live on Williams Us 1969. And I just want to first of all, thank God. I want to thank my wife for helping me out with this presentation. And I want to do this presentation and uh, to teach people how to learn how to trade, uh, buy, sell, and trade stocks. I want to get the people that don't know how to do it. I want to get the people that are maybe afraid of Wall Street, maybe afraid to take their money and make more money, because that's what trading and investing is about. It's about taking your money, not all your money, not your rent money, but taking some money that you want to invest in and saying, hey, look, I want to have a future for myself, or I want to trade to just pay some bills. I want to maybe invest for the future. And I just want to, I want to take my money and make more of a percentage than the bank will give you. Because the banks, they're not going to give you that much of a percentage as far as uh, when they use your money. When you put your money in a bank, in a checking account or a savings account, they are going to give you a small percentage. The rest of that money that you let them keep, they're going to because it's called fractional reserve or fractional lending. What they do is they'll take, if you put like $100 in there or $1,000 in there, you put $1,000 in there, they'll take 100 and keep it for you just in case you want to get your money back. But then they'll take the 900, and this is just a number example. They'll take the 900, lend it to somebody, right? And they'll charge a huge interest for them to pay the banks back. But then they'll pay you a small interest as far as you keeping the money in the bank. So that's why I'm so stern and so adamant about learning how to trade, because, like I said, the banks are going to pay individual people uh, just a small percentage for you to keep your money in the bank. But when you trade and when you invest, right, your return is going to be way more than what the banks are going to give you, because they know people are lazy. Some people are just lazy, and when I say lazy, I mean some people they really don't have time to trade or learn how to trade. But this is where I want to come in. Like I said, or learn how to just invest. Because like I said, I want to teach the people that don't know how to invest or are scared to invest, or scared of Wall Street, scared of taking money and making more money. And like I said, I want everyone to like, comment, share, and subscribe. Get the likes up. Get the likes up. Because I got 5 people in here, so get the likes up. Get the likes up. It's free. Nora G. Hey, how you doing? All right, Nora G. But I want people to not be afraid of Wall Street. I want normal people to because you can beat Wall Street. And when I say beat, you can't beat them every day. You can't beat them all the time, but you can beat them sometimes. And you could beat the bankers. You take your money, and like I said, you put it in the bank. Again, they're just going to give you a small percentage for keeping your money in the bank. So, and okay, Nora, no problem, no problem. But yeah, like I said, get the likes up, get the likes up. So, what this lesson is going to be about is I want to get people more familiar with trading and what um, what can be done as far as trading. Who does the trading? Because you got hedge fund managers that trade, and you got just, I call them garage traders, because a lot of people, when I say garage traders, because some people trade out their garage or their parents' house or parents' basement, or they're just their room. and there are some successful traders that do that. So, um, hey Nick, how you doing? Yeah. So, anyone here, if you have a vote opinion, it's okay. Because there's gonna be people on here voting for Trump, and there's gonna be people on here voting for Harris. So, God bless you either way. So, but yeah. So what I'm gonna do is I'm gonna go through a list of hedge fund managers, the best hedge fund manager traders, because all they're doing is looking at the markets and um, looking at. Sometimes they look at prices. Sometimes they're looking at the volume. Sometimes they're looking at special events, major events that's coming up, or some events that happen already, or events that happen on the spot. So that's what they're doing. They are sometimes, and do you know, if you start learning how to trade and knowing what to do, that uh, we'll go over some stuff. I'll go over some stuff personally when I start, but it's things that you can do and research and stuff like that that you'll know sometimes beforehand. Sometimes you won't know. Sometimes natural disasters might make things happen with trades and companies and stuff like that. So we never know. We never know. But yeah, peace to Raul, peace to Raul, peace to Nick, Nora G, peace, peace, peace. Thanks for being in here, and thanks for wanting to learn how to trade and how to buy, sell, and trade stocks on the markets. Um, so you might see me go to my phone. I got some notes here that I wrote down, and I have some other notes here. I have right here, but yeah. So like I said, you might see me go to my phone just to maybe double check stuff here and there. Uh, but yeah, Ricardo Moulton, what's up, bro? What's up? Peace, peace, peace. Oh, Raul says I'm an editor. Okay, Raul. Um, I'll probably write some information down and probably get with you later on or later on during the week. And but we'll talk. We'll talk. Raul underscore he did sir. Okay, Raul. Peace, 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 peace. So like I said, okay, Ricardo. All right, you said I'm from Ocho Rios, Jamaica. Wow, okay, Jamaica in the house. Jamaica in the house. Jamaica in the house. See, I used to, and I still listen to Steel Pulse. I still listen to Peter Tosh. I still listen to the old school uh, music. That's what I grew up with. So yeah, but yeah, let's go through this list that I got. So this list is going to be the greatest, not the greatest, but the best hedge fund managers and traders that's out there now. Some of them are still living. A couple of them have passed away, but um, right now I'm gonna go through George Soros. George Soros, he's a legendary hedge fund manager, and a hedge fund is basically a trading institution that they cover like all their bets. They sometimes they might in one stock they might buy low to sell high, and then sell high to buy low at the same time. So that's kind of like hedging their bets. That's basically what that means. So I'm gonna put this. I'm gonna click on this, but yeah, George Soros is a legendary hedge fund manager. Soros is widely considered as one of the most successful um, hedge fund managers of all time, um, or investors of all times too. Not discount Warren Buffett, and he's also one of the world's foremost philanthropists. That means George Soros. He's so rich that he gives millions to a lot of politicians. millions to a lot of worthy causes, millions to just things that can help people. And George Soros, I always see him in the news as far as being a philanthropist. Sometimes I can't say that word, but philanthropist. And he manages this company called the Quantum Fund. And it says a fund that achieved an average annual return of 30% from 1970 to 2000. He remains the chair of Soros Fund Management LLC. Soros is also known as a I'm sorry, he has donated billions of dollars to various causes through his grant making network. Soros is believed to be worth $7.2 billion. $7.2 billion just by trading. That's why I love trading so much. The man is worth $7.2 billion. Um, as of September 2024, which was last month, or you could say 2 months ago. Today is only the third. Um, and then he has donated more than 32 billion to charitable causes. Much of that money has gone to fund education and health programs, human rights efforts, um, and the furtherance of democracy. In recent years, he has donated to the Democratic Party in the U.S. So he's a big donor of the Democratic Party. So when you trade and when you invest and you know when you start making all this money and stuff like that, you're gonna be you know it's I know it's times you said to yourself, man, I wish I can get to this person or get to this cause or get to get to this person on the street. So George Soros, he's been a big donation person, I can say. Like I said, that word philanthropist is sometimes it gets to me. Now, here's a couple of bullet points for George Soros. Um, he's a legendary hedge fund manager. He's one of the most successful investors of all time, and he also is one of the world's foremost philanthropists. And he has donated more than $32 billion to charitable causes. So, yeah, George Soros. I think he is in his 80s right now. He is a Jewish descent. He was born in Budapest in August 1930. So he was born like right in the Great Depression. So during the Great Depression, that was when Wall Street crashed and everyone lost their jobs. Everyone, unless it was in demand job, mostly all the Americans lost their jobs after that crash, that 1929 crash. So he was born in the Great Depression. So people in the Great Depression, if you notice, like your grandfathers and stuff like that, they are penny pinchers, and I bet you, most of the people that are penny pinchers got millions in the bank, or thousands in the bank. So you can consider them investors also. So yeah. So here's another one. Paul Tudor Jones. Paul Tudor Jones. We're gonna go back and Paul Tudor Jones. I hear about him a lot, and I'm a 28, 1954, so he's not that old. He's an American billionaire. So all with trading. This is why I'm so adamant about trading, investing, because I'm telling you, these guys are no better than me and you. They go to the bathroom just like me and you. They eat food just like me and you. Sometimes they might get sick just like me and you. Okay, so he's a philanthropist. A lot of hedge fund managers, a lot of traders that are worth millions and billions. They do give because that's part of the Bible. It's the blessing and the giving. So don't get so rich and don't get so high-minded with your money that you don't want to give to people, because you'll get it back. You always get it back. God will bless you to get it back. So yep. And he found that his hedge fund is called Tudor Investment Corporation. It's an asset management firm headquartered in Stamford, Connecticut. And then 8 years later, he founded the Robin Hood Foundation, which focuses on poverty and education. And as of July 2024, which was just in the summer, His net worth was estimated at 8.1 billion. So George Soros is 7 billion, and Paul Tudor Jones is 8 billion. Okay, so like I said, a lot of these guys they graduated just from university. I mean, like Paul Tudor Jones, he graduated with a BA at the University of Virginia. Okay, um, now it's saying here that he was known for predicting Black Monday. Okay, now let's see what Black Monday is. Also known as Black Tuesday. In some parts of the world, due to the time zone differences, was a global, global, severe, and largely unexpected stock market crash on Monday, October 19th, 1987. Now, in 87, I was 20 years old in 1987. I graduated in 85, and in 87, that's when that crash happened. Worldwide losses were estimated at $1.7 trillion. So I say almost, maybe almost the same as the 1929 crash, but a lot of people still kept their jobs. So the severity of the crash sparked fears of extended economic instability or even a reprise of the Great Depression. Okay. So this 19, I'm kind of digressing because of Paul Tudor Jones. It's saying that he predicted this. He said, look, when somebody's trying to predict something, they're trying to say, hey, look, man, I believe that this market is going to crash. Or this certain part of the market is going to crash, and it's going to probably crash the whole market. It's going to make everybody lose a lot of money. So the reason why I'm saying don't be scared of Wall Street, because in Wall Street and in anything, you're going to make money and you're going to lose money. The thing is knowing when to take the money off the table. That's what our head trader, when I traded in New York, like I said, it was just a small prop firm. That's what our head trader had told us. Hey, when you had the money and when you see the money, if the money's on the table, take it off the table. You know, and that's just like I think I don't know if anybody plays poker or anything, but I guess when you know when to fold them and know when to hold them and know when to walk away and know when to run, take your money and leave the table. So, um, peace to everyone that's in here. I'm going through um, a lot of stock traders, a lot of retail and hedge fund managers that make money, and I'm letting you know that we're no less than them. Like I said, they get up in the morning just like we get up. They drink coffee just like we drink coffee. They just read. They read, and some of them just have extra super advisors, analysts to say, hey, look, we're going to get into, they got different analysts to say, we're going to trade oil. This certain section is going to trade wheat. This certain section is going to trade technicals. Okay. So, like I said, don't be afraid to get into Wall Street. Don't be afraid to start trading. And I will try my best to walk you through how to start. If you don't know how to do it, I'll walk you through how to set your stuff up. And, I'm not, okay. And just to let you know, to reiterate, I am not a financial advisor. I'm not a financial advisor. I have to reiterate that. Okay. I'm just a person that studies, and I'm a person that says, I'm going to pull the trigger on this, or I'm going to wait before I make a trade or make an investment. Okay. So yeah, I'm going to put that out there. I'm not a financial advisor at all. But like I said, I did it on my own. I had, some friends or some other people back home. When I say back home, back in New York, they say, hey man, you need to get into this or you need to get into that. So like I said, I'm not a financial advisor, and this is just for entertainment purposes only, as they say. So now, getting back to the other list of traders that I was talking about, Paul Tudor Jones, he's worth $8 billion. He's the one that predicted Black Monday back in 1987. And just like I said, he was predicting it to say, hey, look, something's going down. This is not right. But a lot of people they wasn't listening. Okay. Now I'm gonna go through another one. And DeLeo, Ray DeLeo, I always see him. I see him on TV here and there sometimes. And uh, it says he's a global macro investor for more than 50 years. Ray DeLeo funded Bridgewater Associates out of his two-bedroom apartment in New York City and ran it for most of his 47 years. See, this is why. This is why. I mean, look at Ray. Look at this. I'm gonna read it one more time so y'all can hear it. And you can't make no excuses for this, man. You cannot make excuses for this. DeLeo, a global macro. When macro means big, that means they manage big money. They managing cities. Maybe uh, city funds or whatever. They're managing millions and sometimes billions of dollars. So, a global macro investor for more than 50 years, Ray DeLeo founded Bridgewater Associates out of his two-bedroom apartment in New York City. Two-bedroom apartment. He funded it and founded it and ran it for most of his 47 years, building it into the largest hedge fund in the world and the fifth most important private company in the U.S. according to Fortune magazine. I don't know. I think they still sell Fortune magazines in the stores. His investment innovation, risk parity, alpha overlay, and all weather changed the way global institutions approach investing, and he has received several lifetime achievement awards. Over the decades, he has been a valued macroeconomic advisor to many policymakers around the world because of the impact his thinking has had on global macroeconomic policies. He was named by the Time magazine as one of the 100 most influential people in the world today. Today, Ray remains an investor and mentor at Bridgewater and serves on its board. He is also the number one New York Times bestselling author. So, what I'm saying to say that is just like I said, is to say this. He started in his a two bedroom. Do you know a two? Let me go back. A two-bedroom apartment in New York City, Manhattan, because you got different prices. Even though I'm from New York, I'm from upstate, but I go down to the city a lot, and you still have different prices in different boroughs. So Manhattan is expensive. That's like mostly like living downtown in any city. It's gonna be expensive. Okay, you got Harlem, and that was they had good prices back then, but then it started getting gentrification back in the 2000s and 2010s and stuff like that. Then you got the Bronx going up, and then going down. You got Brooklyn and Queens. So, and then Staten Island and Long Island. But yeah, the man start. So what I'm saying to say this: don't be afraid to start. It's not gonna hurt to start. He started in his New York City apartment, a two-bedroom apartment. So get the lights up. Get the lights up. So Ray Diallo. Now I'm gonna go to one more person, and this guy name is Jesse Livermore. Jesse Livermore. I kind of go off script with this for a second, but he was back in the Great, or after the Great Depression, if I'm correct, or maybe a little bit before. But yeah, Jesse Livermore. Let me get him up because I had him up before. And here it is. Yep, Jesse Livermore. Now he they have a thing called uh, Lessons from a Legendary Trader, and it says, who was Jesse Livermore? He was born in 1877. You know, 1877. Jesse Livermore is one of the greatest traders that few people know about, while a book on his life written by Edwin Levere reminisces of a stock operator. Today, with that book, if I'm correct, is still selling. That book came out in 1923, and it still sells. It's a highly regarded and a must read for all traders. And I read it. I read it a long time ago, but I gotta read it again because once you have books, which is good, you want to go back to your books and stuff like that. It deserves more than a passing recommendation. Livermore, who is the author of How to Trade in Stocks, which came out in 1940, was one of the greatest traders of all time. At his peak in 1929, Jesse Livermore was worth $100 million. 19 at his peak in 1929. So he was part of that Great Depression and the great stock market crash of 1929. He was part of that. So um, now, being that his net worth at $100 million in 1929, which in today's dollar roughly estimates to $1.5 billion. Okay. Um, and it says here, Livermore traded on his own, using his own funds, his own system. The man made a. I mean, see, that's a good thing about trading. You can be like, I want to trade it like this, or I want to trade it like that because that's how comfortable I am. So it says Livermore traded on his own, using his own funds, his own system, and not trading anyone else's capital. Livermore liked trading in stocks that were moving in a trend, and he avoided ranging markets when prices approached a pivotal point. He waited to see how they reacted. Price patterns combined with volume were also used to determine if the trade would be kept open. Jesse was highly successful, but also lost a lot of his fortune several times. Sometimes he would lose it. You know how he would lose it? How he lost a lot of his fortune? I mean, he would get it back, but he would lose it, not following his own rules. When we start setting up stuff, I'm gonna tell people, hey, do it like this and follow these rules, especially the psychological part of the trading. You want to definitely follow those rules. And the most rule I'm gonna tell, I'm telling you this excuse me, as far as um, giving you a nugget. That's what one of my professors used to say. Giving you a nugget. The number one rule is learn how to take the money off the table. That's the I could say that might be the second rule. The first rule is learn how to not lose money because you're gonna lose money, but we're gonna lose less money and make more money because you're gonna have your stock market um, uh, tax, as they say. Because I skate, and sometimes when you fall on the floor, they call it skate tax because everybody think they're not gonna fall, but you're gonna fall. So now, what I'm saying to say this is Jesse Livermore, he was a great trader. He had his own system. But sometimes when he would lose his money, he wouldn't follow his own system. So, all right. Now, the enormity of his success became even more staggering when considering that he traded on his own, using his own funds, his own system, and not trading anyone else's capital in conjunction. There is no question that times have changed since Mr. Livermore traded stocks and commodities. Markets were thinly traded compared to today, and the moves volatile. Jesse speaks of sliding major stocks multiple points with the purchase or sales of 1,000 shares. So he was a big trader back then. He did it by price. He did it by looking at stuff, and he had his own. Like I said, he had his own rules. He would trade with the trend. You know, he said one thing. He said, don't trade when when there aren't clear opportunities to trade. See, that's why sometimes people say, I want to trade, I want to trade, I want to trade, but then it's not the right time to trade. The markets might not give you your setup to trade or to invest. You know, uh, waiting for the market. You know, sometimes as far as his, this is like I said, this is his. These are his points. Let profits go up or go down. Exit trades when the prospect of further profits is remote, meaning take the money off the table. Don't meet a margin call. A margin call is um, like the wise guys in New York. When they give you extra money to do something and uh, to make more money, and you mess up the money, they're gonna come back and say, "Hey, man, we gave you this money, and you were supposed to do something for us to make more money and put some money in our pocket and your pocket. What happened to the money?" That's a margin call, basically. So, and don't follow too many stocks. Um, try to, we're going to try to look at like one section, one sector, I should say. So, yeah. So those are the few traders I'm telling you about. A lot of them are self-made, just like my wife always said. You know, a lot of them, just like DeLeo. He started his fund in his New York City apartment, 2-bedroom apartment. So yeah. Now let's and we're gonna go into some side traders like me and you. See, these traders I mentioned here, they manage big old institutional buildings. Most of them have buildings that almost look like banks almost. Um, but they sometimes they have more money than the banks. Sometimes. Now I'm going to go over a list of movies that I looked at as far as me learning how to trade, becoming an investor, being so interested in trading that I looked at. I looked at a few movies, and I'm going to give you a list that I looked at, and a lot of people have looked at them, and some people have never looked at them. So I'm going to give you, and there's no particular order or anything. I looked at Rogue Trader. I looked at Rogue Trader, but maybe once. Okay. And I looked at Margin Call maybe once, and that's a good movie to look at if you want to start getting interested in trading and investing. I looked at Boiler Room. That was when Vin Diesel. The Boiler Room was about these young traders, and they were kind of like rogue traders too. The Boiler Room is like where all the junk stocks are, the penny stocks and stuff like that, and where they would try to dump it on just anybody, me, you, everybody, even ones that's on this live. They used to call people and say, "Hey, you need to get into this trade. You need to get to this company because they're mining for gold. They're trying to drill oil. And once they drill that oil and that oil comes up, that stock is going to go. That stock is going to shoot through the roof. And sometimes that company wasn't even a oil drilling company. Sometimes that company it was a bum company basically, and most of the time. So that was Boiler Room. I think I watched the ones that I'm mentioning. I watched once. I have to maybe watch them again because I only watched them maybe once or a few times. Uh, well, not a few times, but maybe one time. Now the rest I'm gonna give you, I have watched plenty of times. I watched the original Wall Street with Charlie Sheen and Michael Douglas. Okay, and That was a good one. That was a real good one. I watched that a few times, and that was just a story about a young up and coming trader that was getting tutored by uh, a seasoned trader. But the seasoned trader, he was he was more of a knucklehead basically, and he was high minded with his trading, and he thought he owned the world with trading. And yeah, but Charlie Sheen, I guess, uh, went back and was like, hey, this guy is doing this guy is doing that, and he didn't feel morally right doing what Michael Douglas was doing, and yeah, yeah, came back and he traded. He went against his trades and made a lot of money. But that was just showing about the greed of Wall, because there are greedy people in Wall Street. There are sometimes there are rogues in Wall Street, and there's sometimes uh, stealers in the Wall Street era. So my wife is here. She's just looking pretty as usual, and
Hi y'all.
hey, but
Be
yeah,
sure to like the video, thumbs up the video, subscribe to our channel, Williams Us 1969.
right,
Y'all better listen to this, cause all of this gonna be important later on down the road.
yeah,
Trust me when I tell you.
yeah. So yeah, so Wall Street was like one of the first movies I really looked at. I looked at trading spaces or trading places with Eddie Murphy, and that's still a lesson about trading. Even though it was a comedy, it still was a lesson about trading and how greedy people lose their shirts sometimes. And just like in the trading world, they say bulls make money, bears make money, but pigs always get slaughtered. So that trading places with Eddie Murphy. And Dan Aykroyd. That was a good movie. Shout out to Eddie Murphy. Shout out to Dan Aykroyd. Um, like I said, even though it was a comedy, it still taught you a little, just a tiny bit about trading. Now, The Wolf of Wall Street. The Wolf of Wall Street. That was a good movie. It was a crazy movie, but it was a good. That was a comedy, drama comedy, I could say, or dramedy, whatever it is. But that was a good movie, and that was about the same as Boiler Room. Jordan Belfort, and about him as far as his rise coming up from New York and starting his fund, and how Jordan Belfort, he's a good salesman as far as his trades and stuff like that, because he taught those guys to get on the phone and cold call people like me and you, and these traders, when we get into these trades and saying, hey, this company, I'm just gonna name a company, this company called uh, Blue Dip Oil. I'm just saying the name. Blue Dip Oil, because most of the companies just came up with names. Most of the boiler room companies just came up with names. Blue Dip Oil. Man, this company, Blue Dip Oil, you need to get into this company right now while it's 50 cents. And I need you to buy 1,000 shares of it, or I need you to buy 2,000 shares of it, or I need you to buy 5,000 shares. Because once it's under 50 cents, and once they dig for this oil, and once this oil comes up, the stock right now is at 50 cents. It can shoot to $5. It can shoot to $20. It can shoot to $50. And your $1,000 investment could be worth $10,000, or your $10,000 investment could be worth 50,000. And that's what Jordan Belfort, that's what he did. That's what he did. I mean, he was a good salesman as far as getting people to get interested in buying, uh, crap companies basically. And a lot of people, just like I said, some people are lazy. They like, well, it sounds good. Um, you know, they they're thinking, people are thinking, okay, well, they did the research, they're naming the company, and they're saying they're going to drill for oil, they're going to do this and do that. A lot of people didn't do their research. And you got to remember, back then, even with Jordan Belfort, we didn't have the internet like how we have it now. So now, people could be like, oh, well, you telling me about this stock, but is this a real company? Bada bing, bada boom. So, yeah. So, The Wolf of Wall Street, it was a good movie. And I continue to watch that movie because, like I said, it was just the rise and the super rise. Because, Jordan, Belfort, he was a partier. He was a partier, and he believed in nonstop. Even when the FBI was on his tail, he was like, "Man, forget that. I'm here to make more money." And he just wouldn't listen. He just wouldn't listen until the time came when the chickens came home to roost, and he really had to listen, or uh, uh, and be accountable for jail time and stuff like that. So yeah, The Wolf of Wall Street is excellent. Um, to me, and like I said, everybody has a different movie. They say no, that's the best movie, or this is the best movie. Wall Street Two was good too, with Shia LaBeouf. That was a great movie. It's about the same as the first one, but it was just the continuation of the first one. So that was a good movie. And my best movie, what I consider the best trading movie, is The Big Short. I done watched that movie so many times. I watched The Big Short so many times, and it was just about this recent the housing crisis. Um, and the housing crisis was about a few traders. The scenery was about three different scenarios of traders. You had Michael Burry, um, and then uh, you had the Brownfield Capital Group, and then you had the big guys that own their trading company, and it was just, like I said, they were just three different sections of traders, and it showed you about how the housing market, how it was over, it was overbought, and nobody knew what was going on with the housing market. And what they were doing, they were just taking mortgage-backed securities and putting them in bundles and saying, "Hey, we're gonna make these bundles where people can buy and invest in mortgage-backed securities," and saying, "Hey, back in the '70s and the '60s and the '70s, they was like, well, people gonna, they're gonna pay their mortgage, so we're gonna make a bundle of mortgage-backed securities, and you guys can invest in them. You know, um, this company, ABC company, or AAA company can invest in these mortgage-backed securities because who doesn't pay their mortgage? But I'm gonna tell you, I'll tell you a true story about me. Um, my One of my family members, I was gonna move to Atlanta one time, and one of my family members she was in the real estate. She was in the real estate, and she was like, "Look, cuz I can get you into a $200,000 house with five." She said either $500 down or $1,000 down. I was like, "Are you sure?" I kept saying, "Are you sure?" And like I said, this was like in 2006 or 2007. And I kept saying, "Cuz, are you sure?" And she kept saying, "Yeah, yeah." So what it was they was giving out these ninja loans, no income, no job applications. So the ninja loans were just people out in the street could say, "Look, hey man, I work at Burger King, and I just want to get a house." Now, what these ninja loans was, and what the housing market crisis uh, uh, came up to was, they would have, you got fixed rates as far as the loans. I think they still have fixed rates. Then they have adjustable rates. Okay, and adjustable rates meaning, okay, like my cousin told me, "Hey, cuz I can get you in, right? And then your payment will be $1,000 or $1,200 for the first 12 months. Okay, but you got to get it on an adjustable." And people like, oh man, I could buy a house for, I could put down on a house for $500 on an adjustable. Okay. Now, mind you, I wasn't working at Burger King, but I'm just saying that people that had either no job or maybe underpaid job, and people saying, hey, I could put $500 down, and bada bing, bada boom, I have a house. And the mortgage crisis was these people these loans, um, and they were giving out subprime loans. Subprime loans was like, like I said, people on the street, people maybe from the ghetto, people with low income and stuff like that. They was giving these people loans and saying, hey, okay, I'm gonna give you the loan to get the house. You just put $500 down, and then the banks will say, okay, yeah, we got the money or whatever, bada bing, bada boom. And the first 12 months, you paying maybe $1,000 a month for a $200,000 house. Then after the 13th month, the adjustable rate kicks in, and guess what that rate is going to be? It's going to be like $2,500, $3,000, and people's like, man, I can't pay this. This is, I might have that person might have just one income, or if it's two people, they're barely making it, because you have to realize you got to pay taxes on the house, you got to pay insurance on the house, you got to pay the lights, the water. If you in an HOA, you got to pay HOA fees, you got to pay maintenance. Then you got your car that you got. So that's what that was all what the housing market crash in 2008 was all about. That they wasn't researching stuff. But Michael Burry, that's why I love the Big Short, because it breaks down a lot of stuff about Wall Street, a lot of stuff about how they get over on people and they try to get over on me and you, but we're going to prevent that. We are going to prevent that. So, like I said, like, comment, share, subscribe to Williams Us 1969. So we're going to prevent that. I'm just giving you a lesson about don't be scared of Wall Street. We can beat Wall Street. You can beat Wall Street. It's so many hedge funds and like I said, I call them garage traders, because you can trade in your garage, your home, in your 2-bedroom apartment. But Wall Street, when I say beat Wall Street, you can't really beat them. You can join them and beat them. So yeah, The Big Short. So those were a few of my favorite films that I love. Um, Not, I say like, any person will really love anything except for God and your wife and your kids and stuff like that. But yeah, and a couple of things about The Big Short. They changed the names as far as um, uh, you know sometimes they'll change the name in some of the movies. So The Big Short was um, and the garage, I call them the garage traders. It was about brownfield capital, and they started researching the housing market with this guy named Ben Ricker in the movie. And the two guys, they were called, their name was Jamie Shipley and Charlie Geller. That was the movie name, but the real name of the fund that they had, the real name of the fund was Cornwall Capital. And the name of the real people, their name was Charlie Lidley and Jamie Mai. And like I said, the only thing they did was read. That's how they found out that the market was going to crash. The housing market was going to crash, and when it was going to crash, it was going to crash big. Michael Burry, he read through a lot of financial reports, a lot of real estate uh, reports, and he just said, "Hey, man, I don't think this housing market don't have a leg to stand on, and I'm going to put in credit default swaps." And the credit default swaps, he would go to different banks and say, "Hey, look, I want to give you $100 million for these credit default swaps. That means if the housing market goes down, then you guys owe me such and such money." So he was just shorting the market, basically. He was shorting the housing market. And when I teach you how to buy, sell, and trade stocks, I'm gonna teach you how to short, because you can short markets. If once we research stuff, we're gonna be like, nah, this ain't got no leg to stand on. Let's short this, this week for a couple of weeks or a month or something until we get our money back. But yeah, that's what Michael Burry did. He shorted the markets, the housing market, and he would give this company, when I say company, well, this bank, maybe 50 million, another bank, another 50 million, another bank, maybe 100 million. And the banks were laughing at him like, wow, this guy is stupid. But he wasn't. He just researched. He looked at he looked at the numbers, and he looked at how many people were defaulting on their loans. And that's how we're going to, that's the basics of trading and investing, is reading. That's it. That's if you can read, and you have math skills to add add and subtract and divide, you, this market is easy. Sometimes they try to make it hard. They try to make you think it's hard, and it's not hard. It's not hard at all. Michael Burry was just a college graduate. And you don't have to graduate from college to learn how to trade stocks. If you could read a book, then it's easy. Read and comprehend, then it's easy. If you don't have time to read, you know, I I'll do it for you, and be like, hey, this such and such company is good. This such and such company is not good. Let's put a short in here. Let's do this. Let's do that. So yeah, like I said, those are the movies that I looked at. Those movies got me interested in trading, interested in investing, and the future is Bitcoin too. Now, don't forget that, because if you look, Bitcoin is not going away. They're putting Bitcoin in gas stations now. Um, it's not going away. I know, what I noticed they were going to have Bitcoin when I looked at Star Wars. I still remember that back in 1977 or 78 or something like that. I looked at it when it first, my mom, she took me to the movies to see that. And they were talking about credits back then in the Star Wars movies. They were saying, I'll give you 1 million credits to, take this Millennium Falcon and go get Princess Leia or something like that. They were talking about credits back then. So that's all, Bitcoin is about digital money, basically. So Bitcoin is not going away. It's not going to go away. The government, trust me, if they can get their hands on it and they can make money, the government is going to do it. Trust me. When it comes to getting money and snatching money, they are they're like my Mexican buddy used to say, excelente. They're excelente in doing that. So, but yeah, so Bitcoin is not going anywhere. The market is not going anywhere. Yeah, the market is not going anywhere. And you know, like I said, don't be afraid. We're gonna get through this, and I'm gonna cut it from there. And I thank everybody that joined in, that came in. And like I said before, like, comment, share, and subscribe. And we're gonna get through this. I'm gonna teach you. I'm gonna hold your hand. If you need your hand held, if you got questions, you can DM, or you can put a question in the chat. And if my wife sees it, she'll tell me, "Hey, somebody put a question in." So, like I said, like, comment, share, subscribe, and don't be afraid to trade. Don't be afraid to invest. It's all this here. Wall Street is there for you, for your taking. All right. So I'm gonna end this live, and I'm gonna see you next Sunday at 8 o'clock. All right. Peace, blessings, and shalom. Yep.